Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. It has been a roller coaster of a week. I even heard somebody call this week just sloppy when you looked at the way the market traded, and the fact that there was a lot of outside influences that weighed in and some internal ones as well, like that WASDE report that came out earlier in the week. And it is hard to believe that the WASDE was actually this week. We're going to take a look at what we see, the shift in the wheat and the corn. We're going to take a look at what happened on the livestock sides. There's a lot to break down. Stick around.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back once again. Joining us, we'd like to welcome Craig Turner for the first time to this show. Craig is a part of the great crew over at StoneX. And then we've got Mike Zuzolo joining us once again, Mike with Global Commodity Analytics. And gentlemen, to start out with, obviously want to kick away with your one nugget as you saw in this market, good or bad. Craig, since you're new to the show, we'll start with you first.
Yeah, I guess the big one here is with soybean yields going higher and the acres going higher and the basically stock to usage nearly 13% now. We've fully transitioned from an adequate to tight market all the way to an adequate and burdensome market. And instead of having a 2.5 or 2.6 price ratio over corn, it deserves more like to be 2.4, and it pretty much explains and sums up the price action this week.
All right, Mike, for you, what has been your biggest takeaway on the week?
Yeah, I think Craig hit it there with the bean-corn ratio and the idea that beans are still the leader to the downside, Susan. And I would also say the week's close, especially Friday's price action, where wheat was able to come back. Why? Because of European wheat, keeps the, I think, analysis in place and analysis in fresh and relative that wheat is still our leader in terms of trying to form a price low. Wheat and corn on a world basis are dealing with decade low levels, whether you look at world stocks or world stocks to use. Both of them are facing this type of a scenario, yet the trade is really avoiding those tighter supplies, and they're continuing to concentrate on the big domestic supplies. And so I've got, like Craig, the beans kind of the leader to the downside. Wheat, I think, needs to bottom, and that European wheat is, I think, the first domino that needs to fall because it represents best the fundamentals of the world. I think a big change in this market this week happened before the report, when we found out that Egypt's huge tender for 3.9 million metric tons, a record tender, they took less than a tenth of it. And I think that just really took the air out of the sails of the wheat, could not take advantage of a really friendly supply demand report globally. And I think that kind of set the tone and kept the tone in play.
All right, gentlemen, it was definitely weak. And I said at the intro to the show, it's hard to believe WASDE report was this week because this week just seemed to drag on with the trade. Craig, for you, what is some of the things that you're looking at long range from those WASDE numbers?
Yeah, I mean, actually, Mike brought up a great point. Stock to usage on major exporters, we're as low as we were in 2007. So you're really just waiting for export demand to spill into the United States, which is the world's residual supplier of wheat. And if they are, you can have a potential to see funds flip from short to long, right? And I agree with that. You look at that, but you're looking for bottoming action in wheat. When I take a look at corn, it's real tough to rally in the end of August. There's so much that has to be priced still on either basis contracts or DP, and it's just the market mechanics. But once we get into September and October, and we do start to put in a bottom, probably with the help of wheat too, and I take a look at next year, every time we're below cost of production, we're usually around 88 million acres of corn. If the market even just thinks we're below a 180 yield, all of a sudden 10% stock to usage comes into play for corn. We could see price rationing over the spring and summer if we were dry this year. So I can see scenarios for corn for 25 that are a lot more rosier than, let's say, like soybeans. So yeah, prices are bad, and it's a tough month out there. But it's the first time since 2021 where if you would assume normal acres and yield, you're actually starting to take off of ending stocks year after year instead of building them. So at least that's a bright spot.
All right, Mike, for you, as you look at this WASDE report and we move forward into soon to be the final quarter of 24.
The question is what's going to give the beans the ability to bottom. And if it's not wheat and corn, and that's not led by the dollar and the European wheat futures, and the dollar remains a safe haven heading into the U.S. election, it's going to be, I think, because of the weather and when it comes to the rainfall totals that we see going into the big crop tour this coming week, coming next week. I think, Susan, the big thing I heard 15 minutes after the WASDE report was, well, the crop's going to get bigger, yields are going to get bigger. And I think that's been dialed in because in part of the crop tour, I'm a skeptic about bigger yields at this point after looking at the central and eastern corn belt this week and walking fields and seeing a lot of dented corn, a lot of thin stands, a lot of full season beans that were barely calf high in northwestern Ohio, seeing a lot of high hill ground taken out, zeros in the higher ground when it came to burned up hills. Clients in Ohio and Kansas, Missouri told me very bluntly, I had no zeros in my corn yields last year in my fields. I'm going to have them this year. So I think that's a really big player as we get to the next couple days into Sunday night's trade Monday. See that if there's a big donut hole, high pressure system sitting on top of the Western Corn Belt, and then see what the crop tour starts to say.
And you talk about that crop tour, gentlemen, and I know that I was reading earlier, and the comments actually came from Arlen Suderman over at StoneX talking about the kernel size and how there's going to be some differences that they're going to have to kind of retrain themselves when they do that count. Because as you mentioned, Mike, they're definitely seeing some different numbers and could see some different numbers with the corn. And for you guys, Craig, at StoneX, you're kind of reiterating that information.
Yeah, listen, the crop tour is big. We'll see what the yields are. 183 is the big corn crop, right? And do you go to 84 or come back to 82 though? The thing is that we're talking about on the carryout here, whether it be beans or with corn, maybe 50 million bushels on beans and maybe like 100 million bushels on corn. So it could help in a little bit. To really get beans going, I think not only do we have to see demand come in, which isn't guaranteed, but we're all from our StoneX office in Brazil, they're already calling for lower acres next year. It's dry. I know the USDA has a 169 million metric tons for soybeans next year. StoneX has already dropped it down to 165, and the bias is to be going lower. So, maybe soybeans can get a little bit of help that way out of South America.
Mike, we were talking earlier in this week and again today during the midday program on a Friday that this is the worries that you guys have when it comes to this cattle market. We focused on a lot during the final bell of Thursday, the worries for this cattle complex.
Yeah, it's the funds versus fundamentals all over again for me, Susan, especially with that negotiated cash at midday jumping 10 cents to 190.10. You had Walmart beat the expectations. It's the best running S&P 500 stock in 2024, beating even Costco at this point. You had weekly export sales that were a marketing year high. You had wheat corn prices, and yet that feeder corn ratio, that spread between those two, the feeders and the corn, the funds have really, I think, been playing hard this year, and it looked really sick when it came to Friday's close, as did the fat cattle taking out a channel support level. So I think, hedges are just going to, I think, have to be put in place to keep, by and large, to keep the profitability in place for the cattlemen, because you can't give away both high feeder prices and fat cattle prices and low corn prices. I think it's time to choose one or the other to lock it down.
And Craig, you were mentioning too about, you were hearing some packer bidding that was helping to pull these cattle lower, and that was a factor as well.
Yeah, well, when I look at the crush, and you're looking at live cattle and feeders and corn, and corn has limited downside now. And if the packers are, if their bids are lower and the cash price are lower, and they're bringing the live cattle down, and there's not a whole lot of downside left for corn, it kind of just forces the feeder cattle market lower, and you'll see the funds and the traders, kind of and sell that down too, which is, I think, is what we saw here towards the end of the week. And we've had high prices in cattle for a long time, and if the funds are gonna sell that, then you're gonna get this kind of price action.
All right. What is your biggest takeaway as it tries to let me take you out of a solo thing there for a second, Craig? Mike, what is your biggest takeaway as we look at these markets as a whole? And I want to jump back to the grains for a second as we hit this final quarter, because I mean, we're mid-August for the most part. Um, Harvest downhill slide into 25.
Yeah, I mean, this is where it goes back to Susan, the idea that we're like 2014. I participate in that mindset as far as covering the downside potential for another leg down. And I'm doing that not just because I'm really worried about China, like a lot of the market analysts out there are. I think China's going to throw in the kitchen sink as far as trying to stimulate their economy. I don't think deflation's the problem. I really think it's the US election. We didn't have an election year in 14, but this year we do. And I'm very nervous about the election and that dollar safe haven bid that we continue to see. And that's, I think, really messed up the funds from wanting to buy into this market with record high gold prices and a lot of really good, strong commodity price action elsewhere.
So we talked about this final quarter. Craig, do you see some good things maybe coming into 25?
I think so. The problem is, while soybeans still look bearish for a lot of reasons that we talked about today and what Mike said, at least you can make the argument now that corn and wheat have the best chance of bottoming out and have the best chance of rallying going forward. It has everything to the corn and wheat. They're going to be priced based on stock to usage, either here in the United States or in the global major export markets. We're getting tighter in corn. We're very tight in wheat. Any kind of demand that comes in, any kind of weather problems are going to start showing up. Plus, once we get into November, December, and some weather markets in South America, we're also going to be starting to talk about the ag form. You're going to start talking about what pencils for acres, and we're just not. I kind of find it harder to believe that we'll have over 90 million acres in corn and 87 million acres in soybeans. It's much more likely that those come down some, and you're going to start to see these balance sheets get a little bit tighter. So I am bullish. Once we get through the next month or two, we've been quite bearish over here since 2022, just because the stocks keep on expanding. But we do see now that we're going to be start turning around here, or at the very least for corn and wheat to at least start kind of bottoming out here.
And as we wrap up, Craig, what's your one thing you want to keep an eye on going into this next week of trade?
Yeah, I think here's the thing. You can't get too depressed when corn prices come down. It is just the market mechanics of grain. Old crop needs to get priced based off of basis contracts and DP. And the thing is, a lot of the elevators probably have not contracted that corn out. So when the farmer comes in and sells it, elevators got to turn around and sell it on the futures to protect themselves. And it just creates a lot of downside pressure at the end of August. And the world's not, falling. It's just that, it's just the way the market is in a well-supplied market at the end of August.
All right, Mike, final say. What are you going to look at for next week?
I think early part of the week makes a lot of difference as far as whether we base here and the idea with the weather and the crop tour, and then those final numbers at the end of the week, and whether we can break free from that 2014 cycle. We made a new high for the month in the Hong Kong equity markets. There's a lot of positive relationship between some of the grain indices in that Hong Kong market. So watching that as well.
All right, gentlemen, thank you so much for joining us this week. Quick reminder to our folks, though, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been the Nebraska Soybean Board Weekly Market Roundup.